Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, overnight the markets were very volatile as the US dollar index, which measures the greenback strength against a basket of 6 major currencies, rebounded from around 104.50 to 104.90. In light of the move in economic news, Australian consumers felt worse about the economy in February after the release of the US consumer confidence fell in the second consecutive month. The Consumer Confidence Index, a leading indicator of consumer spending and economic activity, fell 3.1 points to 102.9, down from 106 in January. The expectation for the index was to come out around 108.5. Consumer confidence rallied or soured 6.9 points in December. It reached 108.3, its high since April. From the disappointment, the dollar index has rallied further and looking for the market to probably slide towards 66, 50, 70 for the Australian dollar after its recent gains to the start of the week have somewhat reversed. That ADX has trended into a bear case does support the view to eventually reach this target, but be on your guard, as last time we challenged this area around December we found good demand, and we may do so again as this decline has been going since around 71.5, which was back in late January, and now most probably coming to an end of its move, and expect a little bit of profit taking as demand may overrun supply. So as I mentioned, the dollar did rally further, and this put a little bit more weight to the euro and failed to break for the midway point, and from the rejection keeps the target intact at 105.25. Reassess from there, because if the market does break further and the dollar index breaks above 105 and heads towards 106 as anticipated, then we may be even looking down towards the region of 103 for euro as a broader objective. This in turn expects to see further strength from the dollar to rally on. Now it's broken 136 in dollar yen and looks towards 137 to 138 and on to 142 as a broader target. Although we are overbought, but looking at the broader aspect, the MACD is just coming into a positive potential to support a further gain, and that would see the market immediately looking towards the region of 136.70 to 137.30. Dips are likely to be shallow due to this engulfing candle, and the ADX, although overheating, is still remaining somewhat strong. Sterling, well, the market's still a little bit whipsawed after taking the challenge to the top side and rejected 121.60, has put a slight dent into the actual bull run that we saw from the previous day. And that would mean that we could see a further stress on the support level seen roughly around 119.60. Now a break there would give further scope back towards the last call of 118 and reassess from there. An engulfing candle came through for gold, and from the recent rally I'm not supportive of it, due to the fact is I feel it's just a one-off, the market trying to catch the bears off guard and maybe even shorten the market. But I feel there is many bears out there still and see this as an opportunity, and therefore should expect to see another decline back towards the bottom side around 1,800, and with the objective holding to 1,786. Wrapping up with oil, well, the topside challenge rejected the level around $78 a barrel and put a slight dent into the pattern. However, we still need to see a break of 74.80 to reinstate the downside. Otherwise, we may see another upside attempt, but likely to struggle towards 78.70. Well, that's a wrap for the morning. Thank you very much for joining me, and as always, look out for the intraday report. I hope you enjoy the great start to the day.